Hey, good morning, good afternoon, good evening, everybody. Welcome back to the channel. If you're new, thank you for coming in, subscribing, checking it out. This is one of our money videos. How to create money, how to make money, going to work for money. So this is a wealth building channel if you're new. Today we're going to talk about fighting inflation with collectibles. I've seen this several times on Penny Hoarder. And I'm a little skeptical on it, but we're going to talk about it some more today to give you some ideas on how to make some money during this time, this economy crazy time. So let's talk about this, how we can do it, some of the risk. The inflation genie's out of the bottle, so we need to, there's a growing affection for some passion investments, such as 401ks, such and such and such, the biggest consumer price spike in 4 decades, and volatility caused by rising interest rates. So what can we do to help with this, right? One of the ways we can do this is with collectibles such as fine art, wine, and vintage watches. So these assets don't move in lockstep. They don't move like with the stocks and bonds market, which I talked about on some of my other videos. So if you are an art collector or you are just collecting memorabilia, this might be another way to go and go rogue. Just like the price of chicken or cheese, prices for collectibles tend to rise when the consumer price index spikes. So some of the Wall Street pros say inflation peaked at more than 8% in the spring of 2022. I'm currently making this video around July 4th of 2022. So the inflation will likely stay higher for those who have been used to the 2022 and beyond. The studies show that tangible items such as wines, Andy Warhol paintings, Birkin handbags, just to name a few examples, provide a hedge against inflation and an added layer of portfolio diversification. I've talked about some of my portfolio diversification in other videos on this channel, so you can check it out. According to a 2021 paper by Duke University finance professor Campbell Harvey, and researchers at the UK, an investment firm, during the 8 major inflationary periods from 1941 to 2008, art delivered an annualized gain of 7%, wine 5%, stamps 9%. So if you have any stamps, that might be another good one. That's better than 7% annualized decline over the same period for stocks and bonds. This is why interest in investing in collectibles is on the rise. So, investment in jewelry, that's another one. If you have any jewelry, art, wine, watches, classic cars, collectibles aren't just for collectibles. They are going up, according to Magnifying Money. 32% of Americans surveyed said their main motivation for buying collectibles is to make money, which is pretty interesting. So they have a solid track record. A host of scorecards that measure the performance of collectibles even without selecting for inflationary periods. They show a gain that is not shabby. Now let's talk about some of these risks. All right, let's go back to solid track record for a second. Let's talk about some of these numbers. So let's see what we got here. So the Acker Fine and Rare Index, a benchmark composed of 100 of the world's top wines, gained 63% over the past 5 years. So if you have a wine fetish, you collect wines, there you go, 63% gain. So real estate is not the only way to go, right? Apparently right now. So, over the past year, through the end of May of 2022, inflation jumped from 4 to 8%. The wine index rose 19%, while the S&P 500 declined 2%. Art that was posted for long-term returns in the 35-year span from 1985 to 2020, art delivered an estimated annualized return of 8.3% compared to the 9.9% return for global stocks, including dividends, according to Citigroup. The view among many financial advisors has been that collectibles aren't best suited for knowledgeable hobbyists or the uber rich and shouldn't be viewed as strategic portfolio investment, but that's changing now, as you can tell. Thanks to emerging trends in technology and finance, individual investors can now gain exposure to collectibles that once were out of reach. So now you can post this stuff on all kinds of websites, and you can virtually attend auctions and such as Sotheby's and Christie's, and new apps and online platforms enable a lot of investors to buy wine and art like they buy stocks. So a huge breakthrough is security, which enables you to buy fractional shares of paintings, vintage cars, wine collections, comic books, trading cards, essentially taking a collectible and breaking ownership up into pieces. So this is from the Senior Director and Family Wealth Investor at BNY Mellon Wealth Management. Such of these market transformations mean that more for more people, and collectibles can have a place in your investment portfolio. So according to Joshua Stein, a partner and financial advisor at Stein Wealth Advisors who collects watches and acoustic guitars, so that could be another one, most financial advisors recommend limiting exposures to collectibles to 3 to 5% of your portfolio. That way, it still helps you to have a passion and knowledge for a particular collection, but you're not putting all your eggs in one basket. So some of the risks are the collectibles can and do appreciate. In April, the crocodile handbag sold for $65,000 in an auction, which was way above $42,850,000 is what they paid. So Warhol's iconic portrait of Marilyn Monroe sold for $195 million. But just as the share of electric car makers Tesla carries risk, so does investing in a Picasso painting or even a fraction of a Picasso painting. And probably risky like crypto too. Its unregulated asset class comes with unique caveats. Collectibles tend to be illiquid or not easy to sell. Unlike shares of Apple, which can be sold in seconds using an app on your phone, it can take years for an owner of a quality painting to find a buyer. Collectibles are buy and hold investments, so that means you need to hold on to them for like a good 7 to 10 years, probably almost like a mutual stock fund. 7 to 10 years you have to let them sit and accumulate. And unlike a business generating income like real estate, collectibles don't generate any cash. A Rolex watch can pay a dividend the way stock and Coca-Cola can. The only way to profit from these collectibles is through price appreciation, which that could be a fundamental flaw, according to founder of Full Stack Economics. Valuing collectibles trade on scarcity, condition, and other factors, and it's trickier to calculate company's price earning or cash flow. It's more subjective and dependent on the tastes and the buyers, the whims of the buyers. Popular today could be out tomorrow. Fees incurred to source, stores, and insure a rare piece of art, expensive wine are much higher than an expense ratio for an S&P index fund. And you can't forget about taxes when you sell. Collectibles held for more than a year are taxed at 28% higher than a 20% long-term capital gains rate on a stock sale. So if you are undeterred by these quirks and don't want to go and do it yourself route, you can gain exposure with the help of new apps, trading platforms. I can't even pronounce that. They help you in investing in collectibles the same way a new brokerage app would help you to do stocks and trade stocks. So these platforms harness the experts who they buy the investment grade collectibles on your behalf, and they charge you a fee to upstart their platforms, and they have business models, and they for those who don't have long track records. But that doesn't mean they don't offer value. They do. They just make it easier for you to diversify your holdings of collectibles without spending a fortune. They are a good way to get an entry level into collectibles, into the world of investment collectibles. Now, some of the most popular ones to invest in are wine. If you don't have a wine cellar or you don't have the expertise to pick a winning vintage, you can go to https:// I should have put that one there. vint.co. And I don't know what CO means. I don't know if that's Canada or what that is. But it's .co, not .com. Okay? They started in 2019 and they will do the wine picking for you. So Summerlees at vint construct and curate the multiple bottle collections of the best wines. They focus on future market demand and appreciation potential. So if you want to get into the wine collecting business, they do file paperwork with the Securities and Exchange Commission, and you need to qualify your collection as an investment, allowing you to purchase fractional shares. So that might be something to consider. You'll get a Wall Street style analyst report that lists your wines in a portfolio, and it highlights the investment. There's a lot of transparency, and you know what you're investing in. It's open to investors, and it has an estimated value ranging from $53,000 to $138,000 and can be purchased from $30,000 to $53,000. You don't have to worry about storing the wine because you don't own the physical wine. You own fractional shares instead. There's no annual fee, but Vint charges a one-time sourcing fee of 8 to 10% to cover the storage, the insurance, and the overhead. So how do you make money on this wine? So they sell a collection. 100% of the proceeds are returned to the investors on a pro rata basis. So any gains reported as qualified dividends means they are taxed as a regular capital gains rate. So currently there are no secondary trading markets for the shares on VINT's platform, but if you prefer direct wine ownership, then you can explore the VINOVEST, vinovest.co, and it's a digital trading platform which allows you to buy and sell or drink individual bottles of wine that you own, but they are stored for you wherever you want to store them. They have access to managed portfolios or collections, and they are hand-picked by Vinovest, and you have to complete a little questionnaire, and they build a personal wine portfolio that fits your risk profile. It uses an algorithm that analyzes the data to identify the most investment-worthy wines. And you don't even have to be a wine geek to invest this, says the CEO, Zhang. So you can get started with as little as $1,000, annual fees from 2.25% for the highest Grand CRU tier, which requires an investment of $250,000 to 2.85% for the lowest starter tier. It comes with a $1,000 minimum, and those fees cover the storage, the insurance, and authenticating the wine to make sure what's on the label is actually in the bottle. So Vinovest monitors the market and lets you know when it's time to sell. Because you own the actual bottles, profits are subject to higher 28% collectible tax rates. So Cult Wines, which is wineinvestment.com, is another platform that also lets you build a physical wine collection. So those are two for wine that you might be interested in checking out. So let's go back to art. If you don't have the cash to compete at Sotheby's auction, or you never took an art history, but you view art as an asset class, and you want to invest in multi-million-dollar paintings, consider Masterworks. Masterworks.io. It's the platform founded in 2017. It invests in blue-chip art. And the arts experts and the data scientists, they identify the artists whose work demonstrate a history of appreciation and future investment potential. After the company buys these high-end paintings, it files them in a public offering with the Securities and Exchange Commission. You don't have to be rich or prove you're a sophisticated investor to buy, to invest in these pricey paintings. You can buy shares of the paintings for as little as $20 from iconic painters such as England-based street artist Banksy or Jean Michael Basquiat. It's a celebrated neo-expressionist painter. And it's like a hedge fund. Masterworks charges an annual fee of 1.5%, which covers the management fee. It covers the storage, insurance, and annual appraisals of the art. It takes 20% of any future profits from the sale of the painting, and it usually occurs 3 to 10 years after you purchase it. So your book profits when Masterworks sell the painting. The shareholders will pay long-term capital gains on distributions. The site does have a secondary market for shares, but it's thinly traded, which makes it hard to sell if you want to exit the investment earlier. It's not like you can buy shares of painting and sell them minutes later. That's not how the art works. You usually have to hold on to them for a good 7 to 10 years. With the wine, it's 7 to 10. I think it's 3 to 10 with art. So old school collectibles are another option. And let's go to this here. So all of these things you can go on here. Old school collectibles would be such as vintage cards, trading cards, memorabilia. And you can check out that website there. And they will help you to determine what your stuff can be sold for. So currently for $200.50, you can buy a share of a 1955 Porsche. I should have put a picture of a Porsche up there. A 356 Speedster with an annual value of $425,000. You can buy a Wayne Gretzky rookie card valued at $800,000. It goes for $40 a share. And the bottom line, according to Rally CEO George Leamer, is buy what you love, buy what you know, and buy what you research. And then eventually you can make some money from it. It's like anything in life. You do what you love, and eventually you'll make some money from it, right? You'll become successful. Alright, so that's it on this video. Hopefully you got some good material out of this. If you stayed till the end, then of course you get the best. You got some good websites to check out if you want to invest in wine or memorabilia that you own or somebody else owns. You don't even have to own it. So hopefully this helps somebody to not just sit and wait for the real estate interest rates to go back down again. Give you some different ideas other than stocks and bonds. So I will see you all in the next video. Thank you.